In today's video, I'm going to go over the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now, I do post these videos daily, so I highly encourage you to double check the latest video on my channel, so that way you get the most up-to-date information. And before I get to the technical analysis portion, I'm going to go over the economic calendar. And specifically in terms of one thing I want to cover actually before I go to Thursday's August 15th economic calendar is the CPI numbers. Previously for the core CPI year over year, it was 3.3%, came in at, was expecting 3.2, came in at 3.2%. So there was improvement. And then the core CPI in terms of month over month, it was 0.1 previously, expecting 0.2, and it got 0.2. So there was a slight increase month over month. And then the CPI year over year, so not the core, previously it was 3%, it was expecting 3, but got 2.9. So there is improvement for that aspect. And then the consumer price index itself was, in terms of month over month, so not the core, was negative 0.1 deflation. And we were expecting 0.2, but got 0.2 as expected. So there was an increase in that standpoint. So pretty much neutral. In my opinion, basically the market is still expecting a rate cut in September from the Fed. And at the same time, we still are assessing the data as they come in. For example, tomorrow, Thursday, August 15th, initial jobless claims is coming out at 8:30 a.m. And again, the market is trying to anticipate whether it's going to be 25 basis points or 50 basis points in September. Now, for August 15th, for the Thursday of 2024, at 8:30 a.m., we have the following numbers coming out. We have initial jobless claims. Previously, it was 233,000, and they're expecting 235,000. So if it beats that expectations, then the markets could expect that potentially the market itself, the economy is improving. So therefore, more of a reason why maybe we'll see a 50 basis point rate cut in September. 8:30 a.m. as well, we have Empire State Manufacturing Survey, as well as Philadelphia Fed Manufacturing Survey. And then we have U.S. retail sales minus autos, import price index minus fuel. And then we have at 9:10 a.m. St. Louis Fed President Alberto Musalem speak. And then 9:15 a.m. we have industrial production as well as capacity utilization. And at 10 a.m. we have business inventories. And then at 1:10 p.m. we have Philadelphia Fed President Patrick Harker speech. So pretty eventful day, jam-packed with a bunch of stuff. And overall, if we go to the analysis portion, the S&P, Nasdaq, and Dow Jones are essentially showing upside based off the MAC lines. But the only thing is, though, in terms of short term, it kind of shows that tomorrow we might see a dip and a pullback potentially, but it will essentially be short-lived in my opinion. Again, this is always just my opinion, so please do your own due diligence and research before buying and selling. And just to visually show what I'm talking about, this is an MAC line, indicates if we're in bearish or bullish movement. This is the 1 year chart. This is for the Dow Jones. Yeah, it's still in the bearish movement, so hypothetically indicating potential downside that we're in territory. But the thing is, though, it's trying to cross over to the bullish movement. So in my opinion, 1 year chart trying to cross over to the bullish movement, in my opinion, it's more upside coming up in the future, right? But that is more a little bit longer term. But when I looked at the shorter terms and all that stuff and all the MAC lines, it indicates that potentially, in my opinion, based off of the MAC lines for S&P, Nasdaq, and Dow Jones, that tomorrow could be a pullback. But again, the reason why I usually neglect the MAC lines when data points are coming out is that the data points are extremely favorable for the market in terms of what they're trying to achieve or what they're trying to get in essence. Then the MAC lines can be neglected because then the data points will carry the market in an upward or downward trajectory, right? So there's that. But again, just to recap, the MAC lines are showing a potential pullback tomorrow, in my opinion, and then essentially still bouncing up to the upside later on, maybe the next trading day, or maybe we'll see a consolidation tomorrow, and then on the Friday we'll see a pullback, and then by the Monday we'll see a pull up to the upside, and then just basically have a bullish run, right? But we'll see. We still have data points coming out on Friday as well. Now, I'm going to go over the SPY first, so which is the ETF for S&P 500. So same thing, it's just a different ratio. Mind you, close at $543.75. After hours is slightly up at $544.35. And essentially, if we were to continue up, I'm going to cover the upside first and then the downside. So we'll be meeting resistance at roughly about $546 and some change based off horizontal resistance. And then the next level that potentially could cause issue. These are small issues in my opinion. Actually, the 546 to the 548 is arguably a zone that we could be stuck at for a little while, because you could see a couple times, for example, within here, it would spike up between $546 to $548 and then just pretty much come back down to roughly $542 and some change, give or take. So we could see that too as well. But again, $548 and some change is the next level. And then in my opinion, that would cause issues about the $550 and some change in terms of potential resistance. Can we go higher? Yeah, we can. But again, because I think the MACD lines are potentially pulling to the downside or looking to pull to the downside, I'm not expecting anything higher than potentially 550. But if we were to go, I'll mention one more level, $554 and some change. That's based off of this spike up right about here, which when horizontally you look at it, you can see a bunch of support level bounces as well around that $554 and some change. So 550 and some change will be difficult, and then the next level will be 554 and some change. Again, in my opinion, I think we're heading up to the upside to create new all-time highs soon. That is basically because the market is already anticipating rate cuts in September, so that hypothetically, you could say that's already baked into some markets, but NVIDIA is reporting earnings at the end of the month, and we've been seeing NVIDIA kind of climbing up, and they're expected to beat earnings. So given that NVIDIA is a mega cap stock in the $3 trillion market cap, I believe, give or take, I think that will pull the markets to the upside as well. Plus, again, not necessarily the shorter term MACD lines showing, for example, potential small pullback for like a day or two, but more so for the MACD lines showing a further upside after the fact. Plus with NVIDIA as well going up, pulling up the markets, I'm expecting to retest the all-time highs in the coming potentially week or so, give or take. Week, 2 weeks, maybe 3 weeks closer to the NVIDIA earnings reports, which I believe is on August 28th of this year, 2024, obviously. So now to the downside, if we were to go to the downside, we could potentially see support at the 543 and some change, essentially where we're at right now, because we've seen multiple times, for example, horizontally support plus resistance as well, but more looking at the support. So 543 and some change. And then if we actually do see the pullback, not potentially pullback, but just drop within the next couple of days, we'll, in my opinion, 538 and some change potentially could be seen. And then we'll be relying on the moving average, so 537 and some change, 534 and some change, and then coincidentally the moving average hits this horizontal support and resistance line about 531 and some change, give or take. Will we go lower or higher? It's possible, but the thing is, in my opinion, for the time being, in terms of the next few trading days, that is, I think these are the zones that are realistic, and I don't think we're going to be going lower, in my opinion, unless the data points are horrendous. And then for some reason, NVIDIA starts dropping down based off news of potentially the earnings is not going to be that great and so on and so forth. Because there was one thing, though, for NVIDIA stock, not necessarily advocating for NVIDIA stock or anything, but the fact that I believe one of their chips is delayed about 3 months because they found some flaw in it and they're trying to fix it. So 3 months push, that could affect the sales of future outlooks and so on and so forth for the shorter term. But I don't know if that's going to affect anything. But in terms of that, potentially could affect some stuff, but then maybe something could come across the lines again where it might drop the stock a little bit more. Again, given a mega cap stock, that could pull the markets down to the downside if it were to drop down drastically. I don't anticipate anything. The market's not anticipating anything, in my opinion. Institutional investors were buying in, so on and so forth. I don't know if specifically NVIDIA, but a bunch of stocks. So I don't think they're expecting the markets to pull back quite a bit. They're seeing more upside, in my opinion. So if that is the case, then I'm expecting markets as well to go up as well, given all the data that I'm seeing. Now, in terms of Nasdaq, I'm looking at QQQ, which is an ETF for Nasdaq. Again, same thing, just different ratio. Closed at $462 and some change. And after hours, slightly up as well, $463 and some change. And basically, if we were to go up, first resistance level that we pretty much already saw right now, give or take, is about $465 and some change. We already saw we spiked up to it, got pulled down. We're going to retest that again, $465 and some change. And then next level arguably could be, and I'm going to include it because of the spike ups plus the consolidation spike up past that level, which if you remember from my past videos, this is an upward trend resistance line right about here. This line dates back since 2010. I'll just quickly show it right now. Actually, upward trend resistance line dating back since 2010. So that's what that line is. Mind you, the markets were going up. It doesn't mean the market is not going up. It's just more so it's just getting capped at this whole entire time. There was a breakout since 2020 to 2022, and then we got back underneath it and so on and so forth. And I believe we're still back underneath it right about, yeah, we're still underneath it right now. So this is the line, and we're underneath the 2010. We did have a breakout again, dating back since June 12th, all the way till July 2024, and then came back underneath it. But yeah, so essentially the next level I think would cause the resistance consolidation breakthrough right about there, plus the spike ups, is roughly about, give or take, about $468 and some change. And then the next level about $474, $475 and some change, give or take. Can we go higher? Obviously we can. I'm just expecting these to be causing us issues to break through for the time being until the momentum picks up even stronger. Again, like I stated, just like for the S&P and then the Dow Jones and all stuff and Nasdaq, the MAC lines for the next day, trading day or two trading days, are kind of somewhat indicating a potential pullback. Not necessarily a pullback, but just a down days in a way, I would say, and then going back up to the upside still. But I, again, would not necessarily take those at heart because the data points will more dictate the direction versus the MAC lines for the time being. Now, if we were to go to the downside, we could potentially see support off this moving average of $456 and some change. Then the next moving average about $452 and some change, and then $449 and some change. But essentially, I would be expecting the 447 and some change to potentially hold us based off potentially resistance times levels, and then some support levels bounced off at a different chart. This chart's not necessarily showing that great, chart, but the time frame. This is a 3-month time frame. Can we go lower? Obviously we can. If we were, I would expect it to come down to this level, $433 and some change. I'm just not anticipating anything to be that massive of a drop. The reason why I'm but would state the 433 is, again, because the support level bounces off around that zone. The only thing is, though, again, the market overall, I'm expecting to go to the upside, regardless of 1 or 2 days drop days, because again, Nvidia, market expecting rate cuts, so on and so forth, plus MACD lines for the little bit longer term is more pointing to the upside. Now, next is the Dow Jones. And Dow Jones, again, like I stated, same thing as S&P and Nasdaq, potentially 1 or 2 day pullbacks. But essentially, it more looks like a 1 day thing. Either it's going to be tomorrow or after the day after tomorrow. But the levels that we have to look for the upside, potentially I'll cover the upside first, and then the downside, mind you, closed at 40,008 points. So basically almost 40,000 clean. And then the next level of resistance that we could be looking at is, give or take, like I mentioned yesterday's video, about 40,100 points. And then this upward trend resistance line dating back since 2021, just to visually show, just in case, upward trend resistance line, that's since 2021. Plus, if you zoom in, these touch points actually expand to 2 each, roughly, give or take, for the most part. So 1, 2, 3, 4. And then there was a couple resistance consolidation and support consolidation a little bit, and a bounce off support, so on and so forth. And that resistance level that we're looking at, if you were thinking we're going to hit that level, is somewhere about 40,400 and some points, give or take, in terms of resistance level. Now, mind you, the longer we take, the higher the high will be. And can we break through it? I would say yes. Again, a little bit of the MAC lines are kind of showing a little bit of a pullback, but basically, I would say maybe go to this next spiked up level. This is pretty much not guaranteed because, again, the MAC lines are kind of showing up a little bit of downside, but about 40,500 and some points. But again, I'm not expecting much of a pullback. It's just more of a one or 2 days, but mainly 1 day, either tomorrow or the day after tomorrow. Now, if we were to come to the downside, we could potentially see support off this moving average, which coincidentally shows support off horizontally and resistance horizontally as well, which is about 39,830 points, give or take. And then the next level we're looking at is about 39,400 points, give or take a couple points here and there. And then the next level, I would be expecting about the 39,050 points, but essentially the 39,000 clean. Can we go lower? Yeah, but I'm not expecting crazy drops. And if this upward trend support level, if you think we're going to meet it roughly relatively soon by tomorrow, then you're looking at support. Again, the longer we take to hit it, the higher the low will be. But let's say if we hit it tomorrow, you're looking at support about the 38,662 points, give or take. Again, these are rough numbers just because my number lines are not obviously perfect, but they're within that range, give or take. And then if it were to drop down lower, we do have an upward trend support level dating back since 2021, more prevalent back then because we saw bounce off support levels, but did not touch it really as of recent. But if you're curious what that level is, I don't think that'll be in play, but just in case you think it will be, you're looking at about 37,869 points. Mind you, we will have other support levels on the way down, so it wouldn't be just a quick drop. But that's basically it for today's video. Thanks for watching. I do appreciate it. If you found it beneficial, consider dropping a like. It does help out the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I do upload my next videos, consider following and subscribing so you're notified when I do upload them. And I'll see you guys in the next one. Take care. God bless and peace.